A lot of investors find deals on the internet, and these deal posts look simple. Buy price, ARV, repairs needed, but most deal posts leave out the two things that actually decide your outcome as an investor: market demand and rent reality. Today we're going to break down a deal I found online on Facebook at 331 Lincoln Avenue in Macon, Georgia, and we're going to compare it to a YourRentIntel.com report to see what the data suggests. So for this video, it's education only, not giving financial or investment advice. Just want to compare a deal I found online to a YourRentIntel.com data and its report. So now let's look at the deal and let's take a look at what the deal is claiming. Address of the property here is 331 Lincoln Avenue in Macon, Georgia. Investor price, they're asking $74,000 for it. ARV, $130,000 plus. And repairs needed, about 30 grand. Beds and baths, two beds to 1.5 baths, ready for a flip or rental. So the pitch is low buy price, manageable rehab, ARV north of 130, and maybe can hold as a rental. So now let's take a look on Google Maps and see what this home and neighborhood look like. Okay, so I'll put 331 Lincoln Avenue, so it's one of these properties here. So we go around, we can see, small road, definitely residential area. So a lot of deals you will find will often use best case numbers, and you will need to do your own due diligence. The ARV may be based on comps from months ago, rehab numbers may be underestimated, so you'll definitely need to do your due diligence on properties. So what we're going to do now is we're going to use the report to check the market conditions, rent levels, vacancy, and neighborhood affordability, because to me as a real estate investor, those are the things that can determine whether this is a deal that, is smooth or stressful, or even a deal that I may be interested in. According to the report for YourRentIntel.com for 331 Lincoln Avenue in Macon, Georgia, as we see the property type, single family home, as we saw in Google Maps. Beds, we put 2 bed, 1.5 baths, square footage between 1,500 and 1,600 square feet. And the rent estimate is saying a little over $1,000, $1,010, with the rent range between $790 and $1,230. If we scroll down to the comps, as you can see, nearby 2-bed rentals are showing rents at, in the lower end at $625, $650, and on the higher end up to $1,100. So the report shows basically an average comparable rent of $965, which puts this property's $1,010 estimate about 4 to 5% above average. So to me as an investor, definitely $1,010 is reasonable. Now let's take a look at supply, specifically for single family rentals. This report shows, as we look at the construction area for this report, it definitely shows limited scale rental development activity nearby, or development in general, and most recent permits look to be from single family homes. To me, this means you're not competing with brand new rental projects. Your competition is other older single family homes. These numbers suggest a stable but competitive single family rental environment in my eyes. Now let's look at the neighborhood information. This is where the report gets a lot more useful than just looking at comps. First, let's look at the vacancy rate. The vacancy rate in this market is shown at 22.4%. That's high, and in simple terms, high vacancy can take longer to find a tenant as tenants have more options, and pricing too high can cost you months of vacancy. The next number to look at, the rent to income ratio. The rent to income ratio is shown at 41.2%. That means the typical household will be spending a big chunk of income on rent at these levels. As we scroll down to the neighborhood insights, the report shows a median household income of $29,420 and renter occupancy at slightly above 75%. Simple translation for investors. It's a renter-heavy area which can mean steady rental demand, but incomes are low relative to rents. So that means affordability pressure is real. That combination, high vacancy plus high rent burden, usually means your tenant pool is more price sensitive, aka they're more picky. So now let's talk about some investment math. For single family home, the investor metrics show rent to value ratio at 0.63% and gross yield at 7.53%. This is, in simple terms, this is not a high cash flowing single family rental. It's more a balanced yield play that depends on a stable paying tenant rather than rent growth, which is common basically in lower price single family markets, just like this one in Macon, Georgia. Now let's look at the after repair value data. The post is showing ARV of 130,000 plus. As we look at the report, the estimated property value is 161,000. Sell range anywhere between 92 and 230,000. That wide range tells us something important. Single family values here vary a lot by block and condition. So 130,000 is definitely realistic, but only if the finished product matches the condition level. This is where comps matter more than averages. And if you remember, single family homes are being built in this area. All right, so here's my honest take on this deal. Now that we looked at the YourRentIntel.com data report, as a single family home for it to be rented at $1,010, there are a couple things I would consider. The vacancy rate at 22% means pricing discipline matters. Pushing higher rent will likely cost you time in this area and marketplace. To me, this deal works best if you keep the rehab tight and on budget. I would not say this deal is a home run, buy, renovate, refinance, repeat, or BRRRR deal, but it's a steady entry-level single-family rental that works if you're looking for steady cash flow with little growth. If you're analyzing deals for your portfolio, don't stop at comps. Use vacancy rates, income ratios, and market trend data to test the deal you're being sold. If you're looking for a report like this for any address residential in the United States, this is what you're going to get, and this is what YourRentIntel.com is built for. Talk to you guys soon.